one of the things that helped me to become profitable trader is the understanding, simple understanding of the daily candlestick. Now, I'm not talking about the direction. I'm talking about the nature, the characteristics of these individual candles you are seeing here, either bullish or bearish. All of them have the same characteristics irrespective of the direction. Now, in today's video, I will be breaking it down for you guys because if you can understand these characteristics, this nature of each of these individual daily candlestick, you can be able to, without doubt, know what to expect next from the market. Now, I want to teach you guys what drives this individual candlestick, either bullish direction or bearish direction. So what I'm going to do is that I'm going to break down everything about this individual daily candlestick, and most especially I'm going to do it on lower time frame. Remember what I told you guys, the same characteristics for both bullish scenario or bearish scenario. But before I go to lower time frame, one of the trading concepts that's going to help us in today's video is the concept of liquidity. All right. I know obviously you guys have heard liquidity in the past, but I want to teach you guys liquidity in another format today. Something probably you have not heard of before or you have not made use of it before. Now, I understand most of you guys watching me right now, obviously you know the concept of liquidity. For example, you know that every highs, there's buy side liquidity here, equal highs, relative equal highs. These are areas of liquidity. Price need to come back to seek it. This is what we call draw on liquidity. And somehow, some traders were also able to build their trading strategy relating to liquidity, such as people that trade, after a liquidity sweep, then they are looking for buying opportunity. Okay. Now, all these are very good when it comes to the concept of liquidity. But what we call this approach of liquidity is structural approach of liquidity, whereby you are making use of either market structure or perhaps previous days high or previous days low can be regarded as your draw on liquidity. Now, what I'm going to do is we are going to extract any of these candles here. We have a lot of daily candlestick here. We are going to just pick only one and then use it for our illustration. After we pick it, then we are going to go to lower time frame. We may decide to choose any candle here, either this day or this day or this day, but I can choose any day. But what I'm going to do is that I'm going to just draw a virtual candle, and then make use of it for example. So let's just assume this is a typical daily candlestick, all right? Irrespective of the color, this could be bullish, this could be bearish, but let's just assume this is a bullish candle, all right? Now, what I'm going to teach you guys is what drives this market to this particular direction. All right, it's not previous days high or previous days low. For example, the previous day candle. All right, so what drives this market? Why should this market push to the upside? You guys are aware it's going to take 24 hours before this candle will be completed. All right, now within this 24 hours range, what is driving this market to this particular level? All right, that's what we're talking about today. Now, if we break down this daily candlestick into lower time frame, and we are going to have a structural approach like this kind of nomenclature, something like this is what ICT have taught in the past, whereby this is a typical profile for daily candlestick. This is on lower time frame. So the market start from Asia range and then consolidate, move to the downside, which was this week you are seeing here on my chart, and then keep pushing up, keep pushing up, keep pushing up, another retracement, and then push to the upside, and then close for the end of the day. This is a typical daily profile. Okay, there are different kind of profile as an ICT trader, but this is the most important one. This is the most popular one. Now, if we interpret this profile, you guys are going to observe that the day started from this Asia session. Now, I want you guys to understand this part very well. Okay, you see, the reason why price will go to a particular level is because of liquidity, and I'm going to explain this thing in terms of session liquidity, not structural liquidity. I've told you guys the one I just showed you guys, for example, is structural liquidity. Now, the reason why you see this kind of profile in the market is because price is going from one level of liquidity to another level of liquidity within just that singular daily time frame candle. But all this is taking place on lower time frame. I'm going to give you guys an example by the time I'm done with the explanation. So let me break it down in a way you guys are going to understand. You see, when you take a look at this profile, all right, there's something you are going to observe. This is Asia range, right? This is Asia range. This is Asia high, this is Asia low. Now, if you take a look at this properly, you observe that price seek both sides of Asia session. First of all, they went for the low, all right? The sell side draw on liquidity. By the time they have done read the sell side, then they went for the buy side. And this was when they took out the buy side. I'm going to tell you guys the reason why it is like that, okay? Then after they are done, then the market push to the upside. This is usually London session, most especially London key zone, and then move into New York key zone as well. Now, let me explain this in very well. If you take a look at this profile very well, you will observe that it was only Asia session that price took out both side draw on liquidity. For example, buy side, sell side. Then the market expanded during London session. Now, if you take a look at this London session expansion, you observe that this move, this retracement, all right? Because let me just make this very simple. This is what I'm talking about here. Let's just say there's a move like this, and then another move like this, and then another move like this, and then another move like this. I'm going to change this color to maybe red, okay? I'm going to change it to red and then separate it. So this is what I'm talking about all this while. This is London session push from this low to this high, and then this is a retracement. So all this move here we are retracement, okay? Then if you take a look, this retracement was unable to take out this low during the day, all right? Because obviously the reason why it is unable to take out this low is because this move has a lot of expansion. All right. So you can't compare the size of this move and the size of this move. For example, Asia session is usually very tight, 20 pips, sometimes 30 pips, most especially on Euro pairs or GBP pairs or most of the USD pairs. Asia session is usually very tight. Unless on special occasion, that is where Asia session will be more than 40 pip. But usually it's very, very tight, very, very small. That's why the manipulation takes place more during this London Kizo because Asia session is very, very tight. Price have that freedom, that leverage, to take out both sides. And that is why RCT power of 3 is very, very important if you really want to succeed as a smart money trader. So it is very, very easy for price to seek both sides. So that's why that manipulation always take place in the morning. They go for one side first, and then some retail traders will think, okay, that's the move, the expansion for the day for them to chase it, not knowing this is the liquidity, this was the target. By the time price is done with it, then they push up again to take out this buy side. So they use the opportunity to take out both sides. But if you take a look at this move, this could be like 50 pip. This could be like 40 pip. This could be like 30 pip. This could be a lot. This could be 60 pip. Now, it's going to take a lot because obviously by the time this retracement occurred in the market, that was during the London break. Between London and New York, there's usually a break moment. So it's usually 1 hour break or 2 hour break. So that break period, then you are going to see some retracement in the market. Don't worry, guys. I'm still going to upload another video that does so much, that deals so much with, ICT daily profile. And I want you guys to make sure you watch that video so that you know more about ICT daily profile. So it's going to take a lot for price to come back to take out this 50 pip or this 60 pip movement that was created during the London session before they are going to come back to keep pushing to the upside. Now, it's going to take a lot. This is almost impossible. In fact, I don't think it's possible. 99% of the time, price is not going to come back to take out this low. And that is why you always hear me mention London session will form low of the day or high of the day. Because after this expansion, it's going to take so much for price to come back, seek it. And that is why so many people who say that price go for liquidity to allow that, you need to understand the liquidity that price need to go to. It's not just enough to say price will go from one level of liquidity to another level of liquidity. For example, after price have taken out this Asia liquidity, so you expect them to come back again, take out this London liquidity, and then they push up and then come back again, take out this low. No, that's not how the market operates. It's usually one direction, per time. So as they are going on that direction, they are taking out all the liquidities on that direction, except when there is a case of tight range like this. For example, this Asia session, that is when they will take out both side liquidity, but overall, it keep going to the upside, keep going to the upside. This is the reason why we created that strategy that New York will come back to take out the high that was created during the London session because the day is bullish. That's why we created that strategy of New York continuation direction. If you have not seen that strategy, I will link it to this very video, whereby you can engage on this retracement, to participate during the New York session, to take out this buy side liquidity that was created during the London Kizo. Now, with this simple understanding of how the daily profile operates, how price go from one level of liquidity within the daily time frame, okay, within the daily candlestick, it's going to help you guys to know what to expect next from the market. For example, if I was to trade this typical buying day, bullish day, and price took out this sell side or liquidity, I know that, okay, next is this buy side liquidity. And then after they have expanded to the upside, what I need to do, if I want to engage more trade, I'll wait for retracement. And when the retracement have come in, then as I engage, I won't be looking for a selling opportunity because this is a sell side or liquidity. No, I should be looking for only buying opportunity. And once I engage it, my target is going to be here and then keep pushing up. Now, it's not going to end here, all right? Because there's something I want you guys to understand here. If I carry this structure, this profile, and then take it out of here, all right, bring it to the downside. This is how this whole stuff is engineered in the market from day to day, from day to day. Now you see, this is Asia session. Everything is done. London push to the upside. Now New York come back, take out this liquidity during the London session. Now this is where connect market is, right? This is New York session at this point, and that is why you always note that previous day's high is created during the New York session, especially for bullish days. If it's a bearish day, previous day low will be created during the New York session. Now, at this point, because usually after the expansion, the market is coming to an end for the day. So they will create previous day's high at this point. As they have created previous day's high at this point, the market will be consolidating or be ranging. Remember, previous day's high is very, very much not taken out. Okay. So they will range, and eventually start creating this Asia range again for the market to come back to seek both side draw on liquidity. So this is going to be Asia range, just like what I just explained to you guys previously. This is going to be exactly the same thing. All right. Now, at this point, another range is created. This is the Asia range. Now, you know what to expect because since the last day was bullish, I'm sure most of you guys have watched me teach you guys how to frame direction of the market. Since the last day was bullish, obviously the next day should be bullish, which is this current day we are talking about. Now, what we need is price to seek this Asia draw liquidity to the downside, this SI draw liquidity. Now, after price have taken it out, remember the target, overall target, take this high here, all right? And eventually, while doing so, take our previous day's high, all right? That's how this thing work from day to day. And then now they have taken out this high. Of course, at this point, we are already trading to this London high, okay? Because the low of the day is already formed. Price is no longer coming back to take out this low of the day, okay? That's how this thing is being engineered from day to day, They go from Asia's liquidity taken out, then London session from the low of the day, expand, and then we know that obviously this is the target. You can create a strategy using just this whole stuff I'm talking about. New York session to come back to take us London high, or London sessions to come back to take out Asia high. Very, very simple. Now let's take a look at some examples on the chart and you guys will see what I'm talking about. Now for the example, I'm still going to use this current market, this Euro USD. Okay. Now let's go to lower time frame. Let's go to 15 minutes time frame. Now, I'm not going to use this current day because obviously this is NFP, all right? The day of NFP, trust me, the market always misbehave. But if you take a look, this another session cleared out this Asia liquidity here, this side liquidity with this wick here, and then push to the downside. And then it's almost the same thing I just showed you guys. This is the typical profile, but because of NFP, that's why I'm kind of staying off from this, using this one as example. But you can see this move here, take out these highs here, and then trade it to the downside. Now, at this point, let's identify the liquidities here because this is bearish scenario, right? No longer bullish scenario. The first liquidity is taken out. Now, the next target is here. Price take it out. Okay. Now, this is that London session I was talking about, guys. This is that London push. Now, after price have created this expansion, obviously you know that the high of the day is formed because everything that has to do with this London key zone is completed. Now, where is the next draw liquidity? Obviously is this place. Remember that strategy I was telling you guys, you can seek this place as target, place this trade during the New York session, and then let the market come and read it. You see, this is so good, so amazing. I didn't even wanted to use this day as example, but because of clarity's sake, I just decided to make use of it for example, because I wanted to avoid NFP. You can see this push to the upside, very, very bad move. But if you took this trade, there's no way this will take you out because your stop loss should be somewhere here or there. Now you see how beautiful it is, though the market has not ended for the day. But this is so good, guys, so good. Now let's see previous day. If we can see replicate this thing, obviously we can. Now previous day, this is the London key zone, right? Then what we just need is already there. Price has traded to the downside all the way, starting from the key zone. You can see this move here. This is this low here. Now all the liquidity from Asia session is wiped out. All the sell side liquidity is wiped out up to this point. Where should be the next target? It's going to be here. All right, this high created during the Asia session. Okay, now that's our first target. This move, I think I caught about 70 to 80 pip on this move yesterday, and then the market push it up, take out this liquidity. This is the whole London movement to this side. Okay, now after this thing has been created, what do you expect from New York? Obviously, very good, very good. Expand. If you know this thing I'm teaching you guys and practice it and put it to work, you're definitely going to be happy. You'll be a happy trader. I expect you, after watching this video now, go back to your chart, back test it, make sure. Now, if you have already existing strategy, you can refine it by, taking some of this information and then add it to your own strategy, right? It doesn't necessarily have to, start Why we do watch videos is to refine our own trading system. So with this, you can use it as your full-time strategy or use it to refine your own strategy. Now, I believe this video has been insightful to most of you guys here. If you are new to this channel, don't forget to subscribe, turn on the notification button on. I'll see you guys next upload. Peace.